So again, good morning, everyone, and good morning to those who are also streaming live. We've just gone through an acknowledgement of country whilst waiting to bring those who are live streamed into the meeting. So I won't go over that again. But I would like to acknowledge and thank Reed Corporate for bringing the presentation to us today, and to, I suppose, the shareholders and potential investors who have registered for the live stream to join the meeting today. So thank you, Reed Corporate, and thanks, Kate. Obviously, I welcome everyone who's here in attendance today. I think it's a record number of folks who have attended. So for this company, as Al said previously, maybe next year we're going to have to find a larger venue. So that's a good sign. Thank you. So this morning, Al and I are going to jointly present an update on the project. And if I could ask that you hold questions to the end of the presentation, it would probably allow us to get through things a little quicker. But certainly there'll be time for Q&A at the end. So let's get started. So first of all, of course, it's the usual disclaimer and cautionary statement, which we've just skipped over. The presentation that you see today is posted on the website, so you can refer to it at your leisure. Just starting then with the corporate snapshot of the company, we have about 500 million shares on the register at the moment. The company's market capitalization is around $100 million. And pleasingly, we have, in very difficult times, in market times, we have about $11 million of cash on hand, so that sets us up nicely. Looking at our ownership, Paradise is you would maybe recognize the name. They're a large institutional investor. They've been with us since the early days of this project, and we're very pleased to have them come along the journey with us on this project. Management, which is largely represented by the gentleman on my left, is a major shareholder in the company, along with one of the landowners, which is up in the area of the project site, whose company name is Glenvar. But also we have a junior exploration company named Elma, who's a significant shareholder in this project. That's also a copper project. And I think it's also worth pointing out that Canaccord is a strong supporter of this project, and they have a very large investor base who have invested in this project, and we thank them for that. Our share price, like many other small cap companies, it's come off in 2023, calendar 2023. There's a lot of global political risk out there. There's a lot of macroeconomic risk out there, and for that, because of that, that means a lot of shareholders are electing or choosing to invest in lower risk opportunities. So it's something that we watch closely. What's happening globally in the macroeconomic space. We're aware of what's happening, and I think the key message for you all today and those online is that we are managing our dollars very carefully and very prudently in the context of difficult share markets. And I think probably just the last point I wanted to make is about the team, those who sit to my left and a couple others in the room, and just past these walls, we have a very diverse management team. And from my point of view, that diversity of that team is just what we need to bring this project through the remaining study stages and into development. So just wanted to highlight that. So just getting into the project then, really I just want to leave you with 4 key points about this project. The first 2 in particular, the location of this project and the scale of this project, it's very difficult to find the combination of those 2 things in a location like an hour and 45 minutes drive from Perth, and having a deposit a resource that can potentially last for 3 decades and more. So that is, in my experience in projects here in Australia and around the world, it's very unique, and it's what differentiates this project from many others. The other thing to think about is once you have scale, so 30 million tons a year of production rate, and you've got a great location, meaning that we can get onto the grid for low-cost power, it generates what we call margins. So with large tonnage and low costs, the difference between that is the profit margin that we're all going to enjoy as investors. And then lastly, the timing. Look, we've all heard the story around copper, copper going into, well, just think about Western Australia's update to the infrastructure, to the grid, and all the electrical conductors that are going to be required for that transmission grid. It's all copper. Copper also is growingly going into electric vehicles that we now see driving around Perth and around the world. We also see copper going into wind turbines, both offshore and onshore. So the demand is really growing. But the key here is that the risk is also growing. So the supply risk is growing. And I'll talk about that a little bit later. So a little bit more on the location. As I said, we're about an hour 45 drive from Perth. We therefore do not need fly-in, fly-out for this project. It'll be drive-in, drive-out. And I think more importantly, well, as equally important to that, is we have a very large experienced workforce at our doorstep on this project. We don't need to fly people 3 hours distant and all the costs associated with that, let alone the challenges of managing a large workforce in a remote location. We don't have any of that. Perth is also home, as we all know, to world-class mining. It's why I'm here as a Canadian originally. I came to this country 20-odd years ago. Western Australia is a world capital in mining. And in bulk mining, big open pit mining. And we shouldn't forget that, because that means all the services and all the infrastructure we need for this project are right here on our doorstep. I think the other thing worth highlighting on this slide is the permitting. So it is well defined, it is time consuming, it is detailed, but that's actually good, because when, at the end of the day, as a responsible mining company, our aim is equally to protect the environment. And as we go through extensive environmental studies, and for that matter, Aboriginal heritage, cultural studies on archaeology and the likes, we're wanting to do the right thing. And so the permitting process that has been assessed for this project is called a public environmental review. It's been assessed by the state. It is the critical path on this project in terms of time. But we welcome the time that should be taken to properly define the project and go through that process hand in hand with the state government. So I think at the end of the day, if we think about the location, we think about having good tenure, the ability to have the social license to operate the project with good infrastructure. We're in a low political risk location. The project's large, it's long life. This is what sets up a project for success. So we're taking our time and defining it well in that respect. So I think what I might do is, seeing as the area of expertise in geology and everything to do with the rocks in the ground is not mine, it's my colleagues to the left. I'll hand over to Al to take us through the next few slides.
Thanks, Mike. We won't get into too much detail, but in the terms of the big picture of where we sit, the Caravel deposit is in an area that wasn't previously considered to be prospective for copper or anything really. There hasn't been a lot of exploration in the wheat belt, and that's partly the history of the areas being tied up in private land, and so it was considered to be more difficult, but also just people didn't understand the geology very well. What's happened over the past not so long a time is that gradually this has emerged as a location which is host to now 3 world-class ore bodies. The Greenbushes in the south, which is the world's largest lithium deposit. Boddington, which is Australia's largest gold mine. From time to time, competes with a couple others, but it's a very large project just south of Perth that many people aren't aware of. And most recently, the Julimar discovery by Churchill, which is a world-class platinum, palladium, nickel, copper, cobalt deposit, which is sort of halfway between us and Perth. So Caravel, which is a globally significant copper deposit, is now added to that, and it's a very unusual situation where there are no small operating mines, but there's 3 very significant deposits, or 4 including Caravel, all in the same area, and all share a bit of a geological story, although are quite different. They're all very old. They're all Archean age, and they do all relate to an emerging geological story for this area that we're at the forefront of understanding. To put the scale of Caravel in context, it's now 3 million tonnes of contained copper, and I'll show in a second where that sits in comparison to other projects. But that makes it the largest undeveloped copper project in Australia. And we've just recently added in some additional information about precious metals. So typically, porphyry coppers do have a few other things that add to their value. Molybdenum in particular is common in a lot of the Andean porphyry coppers. We added molybdenum into our study and our financial model earlier this year, which added about 300 million in NPV, so a substantial increase. And we've now done some more work on the precious metals, gold and silver. And they're at lower levels, but when you look at the tonnages involved, they still end up being quite material. So a bit under 1 million ounces of contained gold and 46 million ounces of silver. So they'll add, as we've currently got an assumption of around 30 million a year in our revenues based on the current financial model. We now expect that to double when these go into the next stage of modelling. So they'll add a significant amount of additional revenue. You can see on the right-hand side there that the copper resources, or the total resources that we report, are contained in two deposits, Bindi and Dasher, which sit in the middle of a 30-kilometre long belt. And we've done a bit of work in those other areas, but we haven't done any work in terms of bringing them into the current feasibility studies. So there's a lot of opportunity in the future to continue adding resources in that belt. So Caravel's the largest discovery in Australia in the last decade, and it's the fourth largest discovery in the world. Now there is a couple of others that might sit in there. Friedland's just recently reported another discovery near Kamoa-Kakula. So these are always quite hard to be exact on. But what it shows is Caravel's the largest discovery in the last decade anywhere that you'd like to find a copper deposit. So if you look at those locations on these, DRC, Central Africa, is a very challenging place to operate, very high cost, and so the projects tend to be very high grade, and they have to be very big and high grade to justify trying to build all the infrastructure that you have to build to not only operate them but get the concentrate to port, which is a huge undertaking. Onto in Indonesia, very interesting, attractive deposit, but clearly a lot of political risk still for operations in Indonesia. And Cascabel in Ecuador. Ecuador is a very challenging place to try and make investment work. Central America in general, we look at what's just happened with Cobre Panama, one of the world's largest mines that's been developed in the last 10 years. And that's just been shut by the government, by the protests of people in the street, forcing the courts to then rule that the project's not constitutional. So the big deposits are in very challenging places, and it's very rare to find a large copper deposit in a place where you actually are willing to invest to build a high capital long-term operation like these porphyries generally are. And when you look at the range of other projects, you very rapidly get down to quite small projects, and that's the challenge ahead for the copper industry, is that very few new discoveries are being made at scale. And so that means Caravel, even though we're substantially smaller than these big ones in Central America and Central Africa, we are very material in terms of future opportunity to bring production into the copper market. Very simplistically, there's a couple of pictures just to illustrate what Caravel ore bodies look like. Unlike a lot of the more traditional porphyry coppers, which are effectively the root zones of old volcanoes, and they sit there as large plugs, quite often still in the mountains that formed around those volcanoes. And that's why many of those porphyry coppers in the Andes, for example, are sitting up at 4,000 meters elevation in incredibly rugged mountain terrain. Caravel was formed that way, but is very old and subsequently gone through a process like what's happening today in the Himalayas, where those rocks have been deformed and folded and squashed. So it's a porphyry in origin, but it now looks like a big flat zone that's then been folded over onto itself. Fortunately for us, that's meant that the ore body has been thickened by that folding. So you can sort of see that folded shape in the left-hand diagram, where what we call the east limb and the lower limb of Bindi are folded back onto themselves. And they would originally, before the erosion took it away, they go back over and fold back into the west limb, forming a big dome on top there, which we still see preserved in the north. So it's a complicated history of geology, but it's had a number of advantages for us in that it's created a very good geometry for mining, particularly on that east limb, and we've got some other advantages in the way the metallurgy's consequently turned out because it's all been cooked. So it's a story that will no doubt continue to evolve, but there is a good reason why it is where it is, and we're gradually starting to put those pieces together. Don, I'll probably hand over to Don to talk on some of this in terms of the metallurgy, but this is a diagram that shows the pits that are designed to operate for around the first 5 years of the project life, so what we call the starter pits. And the colours in the left-hand side are showing the distribution of the gold, and the colours in the right are showing the distribution of the silver. And this is from the work that's just been done on the resource update. And it's just to give an idea of what the ore body actually looks like when you look at it metal by metal. The new resource work hasn't materially changed what we think is contained in the resource, but it's increased the confidence level to a point that we can report it. And the most material change is that we've done enough work now on the metallurgy after the last 12 months that we are confident in putting a 60% recovery against that, as opposed to the 30 that we assumed previously. I don't know if you want to add anything else on that, but
Yeah, I think it's a little bit repetitious, but it's when we brought the molybdenum into this project, I think Al mentioned previously that increased the net present value of the project by circa $300 million, which is a significant contribution to a $2 billion NPV. Now that we've got precious metals in the model, in the resource estimate, and together with the metallurgy that Al referenced, and I'll talk about that in a second, we have the potential to significantly increase the NPV gain. So these are two really big financial wins on this project in the last 12 months. So just on the metallurgy, for those who may be interested, when we process the copper ore through crushing and grinding and into what's known as a flotation circuit, which is the real point in time where you're starting to recover copper into something you could sell, the precious metals come with the copper. So they get a free ride. So that means the cost of recovering the precious metals is zero. And that's terrific because it's pure revenue that we're getting from the gold and the silver as it comes along with the copper into a saleable product. 50 to 60% is what we're now seeing in the past 12 months. We've taken more samples from various locations through these pits, particularly the starter pits, because that's early revenue. And with those samples, we've gone back into the lab known as ALS here in Perth and rerun the flotation work so that we're confident that what previously was a 30% recovery of precious metals is now virtually doubled. And we'll keep doing that test work to build our certainty around the recovery of the precious metals, because that is a big revenue contribution.
This is just another diagram showing the shape of the starter pit and the ultimate pit at Bindi. So you get the three pits that we had in that previous one were the smaller ones nested inside the larger ones there. And the point about the bulk mining that Don made earlier is a critical aspect of how this type of project is viable. At lower grades, the key is to drive down the costs so that you can take all the metal that's contained in there and you create some much simpler operation where you're bulk mining, you're not trying to be selective, pulling up the higher grade zones and then having all the waste material that you subsequently deal with. So it's one of the most important attributes about this project is that it's possible to do that. It's not possible on many other projects because you simply end up with too much waste in between in some cases, and you're forced to go selective mining. And so you might have a higher grade project, but you have much higher costs, and therefore they're not as viable. So it's a very common attribute of porphyry coppers that they mine this way. They have what's called a steep grade tonnage curve, and that's what's illustrated on the right. And that means that by pushing your costs down, you bring a lot of extra metal in. And so you end up with a large scale project producing large amounts of metal in a bulk mining fashion. There's a number of projects all around the world that are mined exactly like this at this same scale. All the major porphyries, but the best ones that we compare against are the sort of the mid-tier porphyries in northern Canada, in Western Canada. We named two of them there, Gibraltar and Copper Mountain, that are almost identical in scale and style to this project. Maybe a little more complex in that they're up in the mountains of British Columbia, but we look at the way that they operate and their costs and benchmark all of our work against them, and they compare extremely similar. They're very similar and compare very well. If anything, we have some advantages in our location, and we'll have some advantages in being a new mine. We'll be bringing a lot of technology into this project that they are trying to retrofit or subsequently adopt. Things like high pressure grinding rolls and the automation on the trucks and electrification. And those are the kind of things you can do on these projects to further bring the cost down. So, which is a good segue for the next point.
So let's talk a little bit more about this. So Gibraltar in British Columbia and Copper Mountain also in British Columbia. Just to put a bit of color on that before I go to this slide, Gibraltar's been operating for about 3 decades, and as Al said, very similar attributes to this project. Copper Mountain, shorter period of time, albeit it's been on and off in its mining history, but more recently was restarted. When I say more recently, in the neighborhood of the last 7 or so years. And it's done so well that just several months ago, another Canadian company called Hudson Bay Mining purchased Copper Mountain. They saw the value in it, and as a result made an acquisition, and they now continue to fold Copper Mountain into the larger portfolio of projects or of operations that they have around the world. So they're a pure copper play as well, like we are. But to Al's point, autonomous haulage systems, i.e. driverless trucks, that had its birth here in Western Australia with Rio Tinto. It is commonplace to this day. It's now being adopted around the world, including in some of the big porphyry coppers in South America. It is something that we will adopt for this project. But we're good. There's a little twist for us on this project, and that is, and you can see the photo in the bottom right-hand corner, that's actually at Copper Mountain in Canada. What they've done is they've attached overhead pantographs to the truck. So if you can imagine the Perth train line here, which is electric, and it has these pantographs that attach or connect to the overhead power lines, the Copper Mountain operation does the same thing. So why do they do it? Because they can then take low-cost electricity straight from those power lines and drive that right to the motors on these trucks. So these trucks are actually interesting because they're diesel engines, but the diesel engine is only there to create electricity to send to the motors that is on each wheel. So if we can shut down the diesel engine by taking power directly from an overhead power line and send that to the wheels, we reduce emissions, we reduce the dependency of high-cost diesel fuel, but importantly, my colleague and I stood there and watched these vehicles coming out of the pit, and a fully loaded 300-ton haul truck on diesel was in a bit of a race with the one which was connected to the overhead power lines. And so guess which one was faster? It was the one with the power lines. What does that mean? That means in long term, you can buy fewer trucks to carry the same tonnage from the mine to the plant. And it means that with fewer trucks, you have less costs. So it's a pretty exciting addition to a technology known as driverless trucks, or AHS, that's been operating here in Western Australia for a little over a decade now. So I already spoke about grid power. Why is that relevant? Because in our processing plant, we consume a lot of power. I think the question was asked, 125 megawatts, how's that going to work? Well, of that 125 megawatts, about 20 of that is required for these trucks, but the rest of it is primarily needed for the mineral processing plant. So the way to drive our costs down in the metallurgical plant then is low power costs, and that's why we are aiming to get onto the grid, and we will get onto the state grid to capture that low cost and renewable supply of energy to the project. The other thing we do in the plant is we use high efficiency equipment. So what does that mean? So equipment that can do the job with less power. And those high pressure grinding rolls that you see, it's a bit of a artist's impression there in the top left corner. Those are what Boddington use. They process about 40 million tons a year using these machines. We're 30 million tons a year. So we're comforted by the fact that there's an operating precedent just an hour down the road that we can go and talk to all their operators and maintainers about this equipment and give ourselves, as I say, the confidence to know that it's going to work for us. And they're very power efficient, so that means it drives down our costs. And then I guess in the future, it's worth highlighting that, as Al said, we are a bulk mining operation, but it's not perfect. So there is waste ore that comes from the mine that shouldn't go to the plant, but does. With the technology known as ore sorting, we have a potential to be able to remove that from the feed to the process plant. So if we can divert 10%, for example, of the waste that should go to the waste dump rather than the process plant, we can drive our costs down, or we can increase our production. So that's something, it's not in the base case of the project yet, but it's something that we're watching as an emerging technology for the future. Remember, scale, low cost creates margin. So just a little commentary around the location. Again, we've got all the international engineering firms right here in Perth. We have preferentially decided to work with a company called Caravel Minerals. They're just up at the end of St. George's Terrace. They're the ones that are behind the design of Cobre Panama, sadly being placed into care and maintenance, but the plant was well designed and operating very well up until this point in time. They've also been recently awarded a lot of the study work for Barrick's copper discoveries in Pakistan, these very large Reko Diq project that I think Al referred to in that slide that compares us to these other deposits. So we're pretty happy to have Lycopodium right here in Perth to work with us. But equally, Perth is blessed with strong fabrication and construction experience. So there's a company you can see in the top right-hand corner photograph. That's a company called Civmec, just down here in the Henderson area. Civil Mechanical is what it stands for. They do everything from steel fabrication to module assembly, the second photograph. And they'll take all that to site. They'll do all the earthworks and concreting and put all the modules together. One-stop shop. And they're just 40 minutes south of where we are here. So again, we're very fortunate to have not just Civmec, but others here in the state to help us build the project. I think I've already spoken about the fact that it's a world-class center for mining technology development. But equally, all the global, big global equipment manufacturers are here in Perth. So one of them being FLS, FL Schmidt. It's a Danish company, but it's global. They have a large footprint here in Western Australia, and we're working very closely with them on the equipment that they would supply to us for the mineral processing plant. So I'll touch on that in a minute. Next slide. So
for the farmers in the audience who have got shed envy on that picture, that's the largest shed in the Southern Hemisphere.
It is huge, yeah. 4,000 workers can work in that shed. That's how large it is. So, and they build the offshore patrol vessels in that shed. That's why it was built and designed and built that for that purpose. So a little bit on financials. Sort of probably go straight to the bottom right-hand corner. If we would take 715 million tons of ore going to the plant over the life of the mine. And thanks, Alan. That's good too. That's all right. And we divide that into the 8 billion of life of mine revenue. We end up with a total revenue opportunity of $25 per ton of ore. But it only costs us $10 a ton to process that ore through to a saleable concentrate. So the $15 margin is what we have left. And that's got to pay for the capital investment, which is at this stage estimated at $1.7 billion, of which a big portion of that is the preparation of the mine and the actual mine fleet itself, the remainder being mostly the plant. So it's got to pay for the capital. And once it's done that $15 a ton margin creates, as is shown there, $2 billion of pre-tax NPV at $4 a pound of copper. If you add 50 cents a pound to that $4, that $2 billion turns into $3 billion. So this is a very leveraged set of economics to the copper price. We all think, as do a lot of forecasters, believe that there's nowhere but up for the copper price. It's just a matter of time. We just need to be patient. It will come.
I'll just point out there, Don, that the copper price we're assuming is based on a 72-cent exchange rate. So it's about $5.55 a pound in Aussie. And given all our costs are in Aussie, it's really the right way to think about it.
That's true.
Even though it's quoted in US dollars. And the price today is quite a bit higher than that. It's about $5.70, $5.75.
Yeah, copper this morning is at $3.78. The exchange rate 65. It puts us at $5.70 versus this conversion to Aussie dollars would be about $5.50. So we're not suffering from copper price.
So we're not assuming some high price in the future for these numbers.
That's right. I think the other thing to point out on this slide is the pre-tax cash flow of roughly $7 billion that is generated. As we just spoke about on the precious metals, when we increase that recovery from 30 to 50 to 60%, you're going to add another several $100 million to that, $1 billion rather, to that pre-tax cash flow. So that's going to be bumping up closer to $7.7 to $8 billion once we rerun the financials. We actually have to rerun, and we are rerunning the mining schedules. So we know the precious metals in the resource. Now we go to the mining schedules and plan the mine year by year, so we know how much precious metal comes every year. Once we know that number, we can apply the pricing of the precious metals to those numbers and come up with the new cash flow number. So that's what we're doing, and we'll come back to that early next year. And then Gibraltar and Copper Mountain comparatives are shown down below. I think we've largely covered that. We'll keep following Gibraltar and Copper Mountain and continuing to build the open dialogue that we already enjoyed with the owners of those two companies, and possibly even make another visit again next year.
Don, I think it's just worth adding on costs. Yeah, where we haven't put it in here, but we sit well in the bottom half of the cost curve for the industry. So many of the large new operations coming on are comparable, and quite a few of them are even higher cost. So we're that top left-hand number, $1.23 a pound cash cost. That's the one that most companies use to compare. The one that really matters is the next one, which is $2, which takes into account your sustaining capital. Yeah. And we sit very favourably against any of the new projects that are being considered and many of those that are in production. So it means once built, this project's in a very safe position in terms of its operating costs. Yeah. So a lot of people ask, how on earth are you going to fund this project? Right? It's a very good question. It's not an easy answer. But we believe, all of us as directors of this company, we believe that given its location and scale, and the costs that we just spoke about, that the right projects are going to attract funding. We think this is the right project for all the reasons we've been talking about. I suppose an illustration of that is recently we've made an announcement around an export credit agency out of Denmark known as IFO.
essentially they are Denmark's investment arm. And they've come to this project and said, we like your project. In fact, FLS, who's the equipment manufacturer that I mentioned out of Denmark, we're going to support FLS by providing them loans, whereby then FLS can provide the equipment to this project under a lease arrangement so we can reduce the initial capital investment. So that's a huge vote of confidence by the Danish government in the project. But interestingly, and not perhaps well known even within the investment community, is that the ECAs, in particular IFO, and there's one in Finland called Finnvera, does the same. They're starting to actually get into the space of project finance, which is what the banks usually do. So they've indicated to us that not only would we loan FLS the funds they need for the equipment that you need, we'll also have a look at funding your project. And it's not a small number. When you've got a country behind you, it gives us the excitement to know that there's an avenue to funding the project through the association we have with IFO and are building that association. So that's one. The other thing in the precious metals worth noting is that now that we have the precious metals in the mineral resource estimate and we rerun the schedules, we're now in a position to be able to talk primarily to North American companies, in fact, Canadian companies, where I originally was born. There's a lot of what are known as precious metal streaming and royalty companies there. Franco-Nevada made their riches on doing that back in the 80s. But there are about probably 4 or 5 that are particularly relevant to our project. And we are speaking with one of them now about the possibility of what's known as a precious metal stream, which brings early funds into the project so that it enables us to finish our feasibility study, but it also potentially brings long-term revenue in so that we don't have to go and issue as much equity to fund the project. So we're pretty excited about this, and that's one of our focuses for next year.